So we can start. Thank you very much for being here tonight. Good afternoon, ladies and gentlemen. Now we are going to talk about investing with impact. My name is Julian Toth, as you already heard. Apart from moderating similar discussions, in my daily job, I'm also the COO of the International Sustainable Finance Center, which is a think tank based in Prague, where we focus on education and research in sustainable finance and investing topics. So we could say that I'm a little bit biased. I am really passionate about these topics and subjects, but that's a good thing, I think. But also with me, I also have a panel with, I hope, similar passions and similar interests. And so today I have here Tsvetelina Kuzmanova.
Hello, everyone.
Hi there. So Tsvetelina is joining us from E3G, which is a think tank where she focuses on also sustainable finance in her role of policy advisor in Brussels. And then we have David Krivanek, who's joining us from the Impact Investing Institute, a think tank based in London.
Hello, everyone.
Good to have you here. Okay, so as I said, today we want to talk about topics of definitely growing interest, growing popularity, and growing importance as well. So we want to explore how finance and how investing as a practice is changing now with many different things such as Green Deal, some of the policy, some of the legislation changes, but also with trends, such as sustainable principles, or maybe, how we're trying to go a bit more green and decarbonize. And so what we want to basically explore today is, what some of these changes mean, what they mean in practice, but also what challenges they bring, but what opportunities they present. And maybe just to kick off and to start, instead of going too deep on your introduction, maybe I would actually like to ask you, maybe you can tell us more about what you do in your daily job, but also maybe how your role in your job, how has it changed in the last, let's say, 2 or 3 years with all the changes coming? Maybe, Tsvetelina, maybe if you can start.
Yes, thank you, Julian. For me, I started working on sustainable finance on EU-specific policies. In my current role, I joined during the pandemic, so lots of changes for me professionally. But I did join from the Bulgarian non-banking financial regulator, so I actually worked on the regulation of it. And yeah, sustainable finance, the topic has been picking up pace. But when I started first working on it, everyone, especially in a country like Bulgaria, where this was not a mainstream type of investment, everyone was like, why do we even need to work on this? And today, probably most of the people interested in the topic know about the taxonomy, which is the EU classification of sustainable investments. I get calls from New York Times for journalists in China, and they're like, what is it? Please tell me about it, explain it to me. So people are really starting to get interested in the topic, and currently, globally, the sustainable capital markets are around $3.5 billion, and it's picking up pace, and not only in value, in volume, but also in terms of people's thinking. So from a regulatory perspective, but also from a practitioner's perspective, things have really been changing in the past 5 years and will continue to evolve even further. So yeah, this is a very interesting and exciting topic, and I'd like to think of it not as niche as it once was, but more mainstream, and in a couple of decades, why not the only type of investment that we'll actually have.
So definitely keeps you busy.
Keeps me busy.
Yeah. And David, so a program manager at Impact Investing Institute. So what does it entail normally, and how has it changed maybe? What developments have you seen?
Absolutely, and I think it was a very similar experience to that of Tsvetelina. So the Impact Investing Institute, we are an industry think tank that is working particularly with investors and policymakers in order to accelerate the growth and improve the effectiveness of the impact investment market. We are based in London, so we do tend to focus a lot of our activities in the UK, but we also, as a lot of the capital that is managed in the UK actually ends up in other countries, like in Europe, in emerging markets elsewhere. We also do quite a lot of work there. And in my daily job, it's a mix of research, awareness raising, talking with investors who might have heard and coming under increasing, it might be pension funds that have heard that some of their members are interested in knowing what are the environmental and social credentials of the investments that the pension fund is making in their name, and they increase pressure, and so these investors are then interested in knowing more about this practice of sustainable investing, of impact investing, etc. And I would say that similarly, the job has changed a lot over the last couple of years since I started, particularly in that there's much more interest in this topic. Last year in the UK, but obviously it was a global event, we had the COP conference in Glasgow. And I think one of the things that really came through that is a recognition that private capital just cannot stay on the sidelines of solving the challenges of environment, of the climate crisis, of social inequality, that capital has a role to play, and at the same time that there is a lot of money that now wants to do good, and that can be deployed and leveraged to achieve for the benefit of society. So this has led to many more conversations, richer conversation, because people are getting much more educated on this. So yeah, that was one very noticeable change.
That's good to hear. Also, maybe just to mention, because I'm actually really excited to have you two here exactly, and just to mention, so this panel specifically was also supported by the British Embassy in Warsaw. So we also have you from London here, which is bringing that experience with working with actual big asset managers and investment companies and understanding also the private sector financing and how that is changing. But also we have Tsvetelina looking more on policy making and policies. So actually we do have a good panel to give you the overview of what are these changes. And I said changes a couple of times, but so what exactly are we talking about here? So Tsvetelina, if you can maybe just give us slightly more bigger overview, big picture. So what is changing?
Maybe I should have mentioned that I work in Brussels, which is in itself, when the policy-making world is a bubble in itself, and the policies there do not necessarily always get translated into action in the member states. But as I mentioned, the policy landscape has evolved so much in the past several years. In the beginning, how it started, it was purely on a voluntary basis, and we were expecting, and policymakers were expecting that there is the demand, and businesses and financial market players would like to do this and to really disclose their information on a voluntary basis. Then it moved more into the transparency type of requirements for companies. So the European Union, when they started talking, the European Commission, when they started thinking about sustainable investments, they thought, okay, we have the market principles, we already have some high demand for those types of investments, so let's make it as clear as possible, as transparent as possible. So from there, we obviously had like the big headline of the taxonomy that I already mentioned. It's the classification of sustainable investments. The other big name the other big legislation that some of you might have heard of is the SFDR. I have more acronyms in the acronym soup where this is coming from, but it is the Sustainable Finance Disclosure Regulation, requiring financial institutions to disclose all sorts of information. Also the CSRD, a Corporate Sustainability Reporting Directive, for also companies to report on their sustainable practices and their impact. So a lot has been going on, but from there we see now a next phase of evolution in the regulatory space, in the policy-making space, that it's not enough to only think about transparency and to just let demand and free market principles lead us to transitioning to a clean economy. But we're looking more into minimal requirements. I personally see that the next phase for this and next year in Brussels will be more focusing on labeling schemes, and where you have minimal requirements. Okay, if you're a fund manager, or if you're investment intermediary and you claim that some of your fund or your portfolio or your financial products are green, then you need to comply with a certain minimal criteria, like a certain percentage alignment with the taxonomy, for instance. So I see this as the next shift to have minimal requirements for businesses and for financial market players. What I'm yet to see, but I think within several years we'll probably get there, is a change of the actual financial infrastructure, how we need to restructure the whole financial system. So it really, as I said, it's not niche anymore. So this is the way we think. This is the way we do finance. This is the way we invest. This is the way our businesses operate. So I think we're moving into a more structured approach there.
And I completely agree. I mean, there has been a lot of legislation, right? And it's still coming up, and it can be confusing as well, to be honest, not only to financial institutions and businesses, but I think the main story here, it is that it is mandatory now, it is changing, companies need to follow and need to adapt, right? So this is a really good overview, and thank you for that, of all these legislative changes being the driving force behind the change in behavior as well, right? And we're talking about sustainable investing and investing with impact, but now going from that bigger picture of sustainable finance, there already is practice. There is a practice focused on creating positive impact called impact investing, and that is something David is focusing on. So can we maybe go from that big picture and maybe take it to slightly more concrete impact investing? So what is it exactly?
Yes, absolutely. So impact investing, you can think of it as a subset of the broader sustainable and responsible investing or ESG investing sort of universe. And impact investing stands out because of a number of characteristics. So the definition we traditionally use for impact investing is that impact investment is investment that is made with the intention to deliver positive and measurable social and environmental impact alongside a financial return. And this is some of the core characteristics come true to this definition. So it has to be intentional. Like, I would argue that all investments have an impact, positive or negative, but in the case of impact investment, the impact is part of the strategy, right? You want to zero in on that. It has to be positive. So this is one key difference with ESG investing, which tends to follow a do no harm approach. Here you actually want your capital and your investments to contribute to the solutions as well. It has to be measurable. You need to have an idea of what is the change and the positive impact you want to bring about and how you're going to measure it. And very importantly, it has to come with a financial return. So we're not talking about charity, we're not talking about philanthropy. This is something that will deliver impact investment, if done properly, has the capacity, and there's a long track record across asset classes, across teams, across geographies, across ticket sizes for various types of investors, that shows that you can have this positive impact, and at the same time, you can also deliver interesting risk-adjusted financial returns.
So, okay, that's really interesting so impact investing maybe in this region could be potentially for some people could be slightly new or newer. I mean, there's some funds, I know of few funds in C working on this specific practice or subset, as you said. And I think probably there will be more and more, right? I mean, maybe that's something you have seen as well. There is certain growth of impact investing maybe across the regions as well.
Absolutely. I think it's a global phenomena, and it's not something that is limited to some of the big financial places in London, New York, Paris, elsewhere. It's really across the globe. There's various estimates that try to assess how big the impact investment is globally. I think the latest one was from the International Finance Corporation, which put the market, I think, at $2.3 trillion or something like that. In the UK, we just completed a similar exercise to estimate the market, which put it at around 60 billion pounds, something like that. And this is something that has really grown immensely. I think using the IFC methodology, when they did the same thing 10 years ago, I think it was like a tenth of what it is today. So it's really something that is growing extremely fast, that is becoming much more diversified. And as I said, that is bringing in not only, what you might think as small boutique impact investors that would be focusing on small investments, but increasingly is bringing in the mainstream institutionals who are looking for interesting returns, but also a positive impact. And I think that's going to be the story of the next 5-10 years.
That is really interesting, actually. So I told you today when we met. So I did my master's a couple of years ago, and I was also touching in my dissertation on the topics of impact investing. And I remember even mentioning, like how big is the market? And I think it was maybe like half of what you said. And I think that was 3 years ago. So it's a very clear indication as well, together with what Tsvetelina is saying, is that this is the direction we are going, right? This is not only the Green Deal, it's not only legislation, but we see the financial market going more towards sustainability and actual measurable impact. Okay, so that's where we're going.
I want to challenge you both on this. Like, how do you even measure impact? Because this is what I struggle with. Not that I struggle with, but I work more with, in the policymaking space in Brussels, we work more with intent rather than impact.
Yeah.
So even when you invest in something and you use the right methodology and you use ESG and sustainable methods and practices, if it doesn't have any actual result in the end, is it actually sustainable? So this is, I think, for me, the big conundrum of how I link my work to your work and the niche of impact investment. With not having enough available data to measure impact prematurely, the best that investors can actually do is use the right methodology, use the information available and the right tools for these transparency of their investments, and just invest from a socially responsible perspective with this type of thinking.
I'm going to join your challenge here and ask David. No, but I agree. So it's really interesting, and I think that is exactly what makes impact investing a bit more unique in a way. It is that intent, it is that methodology to measure it, and it's definitely, I think that's the really challenging part, and I think that's why maybe one of the questions you probably get quite often is, how can all the big players and big asset managers from BlackRock to Fidelity or Vanguard, can they go into impact investing? Because obviously they want stable returns. They also usually have really big ticket sizes, right? Let's be honest. So what happens? Can even these big companies and can some of the really big impact investing investments, is it possible to measure impact?
Absolutely, yeah. So to take the first part of that question on what institutional investors and some of the big players can really do, again, this is something that is really happening because there's more pressure on these type of investors, particularly in the case of pension schemes, from their members to invest in a way that is more aligned with their values. There's also a sort of generational shift element where if you poll, for example, millennials, but not only millennials, they will be more interested in seeing their money that is invested in their name by financial institutions, that it matches their value, typically combating climate change, being aligned with social objectives, etc. So this sort of creates a bottom-up pressure, but at the same time, there's also, because of this, in a way, supply of investments will follow demand, right? And so you've had a very fast-growing ecosystem of different types of intermediaries, for example, fund managers, asset managers, who have really stepped up their game in developing products that have very credible impact. And going back to the idea of measurement, there's a lot of, one might argue there's too many methodologies out there. The problem for measuring impact, the problem we don't have is that we don't know how to measure impact. It's just that we don't necessarily do it the same way, which creates, it's a different set of issues. But I think maybe we'll talk about that. Maybe there is going to be some harmonization in that is coming down the line. So impact is being measured in these opportunities. They're big ticket sizes. I could think of a few funds, quite a lot of them actually, that are able to have investment sizes of $100, $200 million, more than, and even more than that, and that deliver very credible returns, impact propositions that tackle different type of strategies. You can look at infrastructure, you could look at housing, you could look at different type of private equity investments, and there's really a lot out there. So I think it's becoming really much more part of the mainstream offer for institutional investors to have something that incorporates impact alongside a financial return.
No, I agree completely. I think also partly depends on the region as well. How the topic is developing as well and how the practice is developing. But at the same time, there probably is more and more examples, let's say, right? And I think that business case is definitely getting stronger and stronger, also with legislation. But being conscious of the time, because we have limited time here, and the topic of the discussion is also opportunities and challenges. So let's actually just quickly look into some of the challenges. So, Tsvetelina, you speak to companies and also policymakers, and especially when it comes to implementation of some of the legislation, which can be a little bit chaotic, as we said. So, what are some of the main challenges businesses have?
Yeah, we do get this a lot, that the regulatory space is still very messy and not very clear, and people are facing challenges of how to actually implement and comply with this. So definitely one thing is more clarity and making the whole regulatory space more clearer, so it's easier for people to comply with. But also maybe to look at data and data availability, because for financial market players this is a big issue that you need to have in order to avoid just the box ticking exercise. Yes, check, yes, I comply with this, to really have the available data in place for companies from real businesses, real economy market players. And this is a major issue that we hear across the board as people are starting to comply with this. But I would say that this is both a challenge and an immense opportunity, especially for the region, for Central and Eastern Europe. I think it's high time that we stop looking at this as a compliance challenge and more in terms of, okay, why do I need this? Where do I need as a business? Where do I need to be? How do I get there? And how is this benefiting me? What capital is this bringing me? What investors' interest is this attracting? So I feel that within the real economy for businesses and industries, the next big thing now that is in the making in the policy space is focusing more on bigger companies, on conglomerates, but will eventually translate into a smaller companies, to think about your transition path. It is clear that we're getting there, but imagine where you need to be and how do you get there? And then by having those transition plans in place and hitting certain targets, you're already more visible for investors, you're already more attractive for this demand that is inevitably happening. And we can talk about stakeholders' interest in this for big institutional investments as well. But it is clear that generationally and with demand, things are changing, and people are not looking only at investments with returns, but they're looking at other aspects of investments. So the moment we start making our businesses thinking about, in their business model, thinking about how to transition to a cleaner economy, because let's face it, it's not only the bigger players, and it's easier for them. They have like whole departments responsible for this. They have like more capacity to do this in-house. But we need to also do this for the smaller. Small and medium-sized companies, which especially in the region is the backbone of the economy and the backbone of the European economy. So the moment we start thinking about this and looking at it not from a challenge and reputational risk issue, and start thinking of it more from an opportunity perspective, okay, this is making me visible to investors, this is helping me attract this much money to be this type of business in 5 to 10 years, for example. I think this is the biggest opportunity.
Yes, no, I completely agree. And maybe just to conclude, because we are running out of time, and maybe on that note, I would even mention, so I think that's how we see it as well, working with these topics in our bubbles. It is that obviously this is bringing plenty of opportunities, especially for this region as well. And I mean, probably the best is to start looking into it as soon as we can. Cool, thank you very much.